Hey everyone, thanks for jumping here back again. Today we're going to be talking about Elrond's native token, Egld, and we're going to be discussing the risk metric that will help us make choices regarding Elrond for the next run. If you guys like the content, please subscribe to the channel, leave the video a like and a comment, as every bit of support helps us moving forward. Let's get into this one. So if you are new here, this indicator is how I personally like to navigate the market, and I use this metric with almost every coin that I hold, because the question that always comes in when investing into this space, when investing into the crypto space is there really a method and a strategy that we can follow, or should you just keep buying each time the price drops? So today we're going to be clearing that and debating this idea of buying the dip. Now this indicator is on the scale of 10, with 0 being the lowest risk point and 10 being the highest risk level. And this metric is basically a combination of 4 other indicators, which are the RSI, volatility, volume, and difference between the EMAs that have been improved throughout the time to suit our market. So this whole green region here, when the risk is below 4, has historically speaking been our buy area, also known as the accumulation zone, and the red area has been our sell area. Now the last time we have fully deployed it with Egld, Elrond was, I think, here, and we say that the risk was way too high to keep holding. The risk was above 9, which usually indicates that the price is about to collapse, which ended up to be the case, and we saw a move of 80% to the downside. Now a good strategy to follow and to avoid exposure to high risk is to gradually buy and gradually sell using this indicator. What do I mean by gradually? Let's say, theoretically speaking, you have $1,000 that you want to invest. A smart idea would be to buy with 10% when the risk is below 4, with 30% when the risk is below 3, and with the rest, which is in this case 60% when the risk is below 2. And the same applies for selling. You gradually sell just to avoid any risks of the price dropping down and missing on profits. Now, of course, you can go full aggressive by eliminating 4 and 6, looking at this chart this way. You only buy when the risk is below 3 and sell when it's above 7, and that can work for you. I personally prefer following this method with Elrond because it has proven to be much better, but you don't have to follow it. To each his own approach and to each his own risk tolerance. Now the price is currently at 270 after dropping 54% from the all-time high, and while the risk is below 4, which theoretically speaking means that it's a good buy opportunity, this doesn't mean that the price can drop any lower. The price can even drop another 20 to 25%, taking us back to $200. It's possible to see something like that, but I see this whole region as a buy opportunity. I don't care if the price drops another 20% the day after I bought. I just see this whole region as an accumulation phase for me. And the lower it drops, the lower the risk gets and the more I buy, knowing that I'm getting the coin when the vast majority are selling. For example, back here in 2020, if you followed this strategy, you would have ended up buying Elrond at an average price of $8. Same thing this year. You would have bought Elrond, Egld at an average price of $85 per coin, which, whether you agree with it or not, is an amazing buy price. Now, a lot of people are still skeptical and will still tell you to buy whenever it dips, but buying what's supposed to be a dip is a really bad idea if you don't follow a certain strategy. If you go back in time to 2020, for example, and this is just a small example, we have plenty of these out there. So the price dropped massively in days, doing a 50% move to the downside, and a lot of people saw this as a dip, while the risk was indicating that it's way too high to buy. It was too high to jump in and get Elrond. What happened later is that the price kept on dropping, and those that bought what they thought to be a dip lost 60% of their initial money in a matter of weeks. You don't buy when the risk is above 4, even if the price drops 40% overnight. If the risk is still high in these regions, everything is possible. Now, do I think the price is going to keep dropping? It's surely possible that we keep following this short-term trend. We still have a bearish momentum also with the weekly. On the KDJ, sure, the price can go up to $300 again or even $350, but that doesn't mean much. We still have a downward pressure coming in, and frankly, things don't look good for Elrond. I know a lot of you are going to say that it's because of the DEX, because the DEX got halted and it's in maintenance, but these are just excuses. To be fair, we have had a beginning of a bearish momentum before all of this happened. So I said said it a couple of days ago, I say that Elrond will most likely keep moving below our resistance and support between 260 and 310. So now the question is, where will the market take us going into 2022? Will it be much better? Will the price keep on dropping? Will the risk dropping and offering much better buy opportunities? We'll see, guys. I hope you enjoyed the video. If you did, make sure to subscribe, leave the video a thumbs up, and peace.